All right. Good morning. Good morning. It's nice to see you guys here today. I'm always excited to come and teach our classes. It's so much fun. And we're glad to get started. Again, we're on the summer schedule, so we're a little bit lazy and lackadaisical. I know. I know. We only teach 3 times a week. Tuesdays, Wednesdays, and Thursdays. We take Mondays and Fridays off because we are on the summer schedule. I am a university teacher and I like to take my summers off. And so we will get back to our full time schedule in the fall. But for now, and I know we got so many things to talk about and so much stuff to do and so many things. I don't know how we ever do it in 3 days. I don't think we can. So, what I've done is I've created something for you guys. I'm going to tell you about it here in a little bit. So, just hang on and we'll get the introductions done and we'll get started on our lesson for today. Got some very important things to talk about, and then we're going to review our portfolio. And I'm also got some other stuff that I need to talk to you about too. So I got a lot of things to share today. So we got a lot to do and we got to get rocking and rolling here. So the first thing I want to do is mention to you that I've moved. I am now up in my back home actually. My actual home is up there in Logan, Utah. So this is where I live. And I am back up here. I come up here now just for the summers because I teach down at the university in St. George and it gets too hot. It gets too damn hot. I know some of you guys are still down there and it gets relatively damn hot, relatively damn hot down there. And so I'm happy to come back up here to Logan where it's, we have cooler summers and I got my beautiful desk. I got one, two, three, four. I got 4 monitors all hooked up and I had a little trouble this morning. Have to admit, I got everything all hooked up and ready to go and went to share my screen. And this little software program that I use that projects my screen into YouTube wouldn't share all my screens. And so I have all my computer screens and I bought a new 4K and everything. I'm all fancy. Boy, I'm telling you, I have the setup here, the dream setup. So pretty happy with it. But I couldn't make it work with this new little wire with this software that they give me. So I had little struggles, but that's okay. I think we get it figured out. I'm working on my little side computer instead of on my nice big 4K, but that's all right. We don't need 4K for the projection side because it makes the fonts a little bit smaller, but I was able to make the fonts a little bit bigger over here. So I think that this is better, make it easier for you guys to see. I don't know if you can tell the difference, but I can tell the difference. And all right, so that's kind of the technical side of what's going on here. But I want to just start off real quick just to tell you, we do have summer class schedule, and so that's what we're working on. And today we're going to review our portfolios, and we're going to go down through the 100% club class. We've got to go look at what we've got open and see what's going on. We are expecting a little pullback in the markets right now. Bruce is like, so Bruce, you're staying, are you? You're down there. You're down in St. George. A little bit brutal down there, he says. They do get a little warm, so I'm glad to be up here. And I have my house down there too, but this is my permanent house up here. I just have a condo down there. I used to have a house down in St. George. I think I've told you guys that story. I sold it. I was like, I don't know why I'm here in St. George. I want to leave. I want to go travel around the country and be in lots of different places during the winter time because I don't like to be up here in the winter time because it's too cold. Too hot down there, too cold up here. So it's a nice switch to be able to go back and forth between the two. But sold my house only to have the university call me on the phone and said, hey, we have a position open. Would you like to come and have it? And I was like, hell yeah, I'd like to work for you guys. That'd be great. I would love that. And so they actually called me the other day and asked me if I would like a promotion. They said, your classes are pretty popular. People like you. You're doing well. You've been with us a long time. Would you like to start teaching a different type of class? And I looked at it for a while and I thought about it for a couple of weeks. And then I was like, well, I would be teaching the younger kids. I wouldn't be teaching the adults. And I was like, nah, I like the adults. I don't want to do that. So I think I'll stay here where I'm at. I just like doing what I'm doing. And I teach the night classes for the adult classes, the continuing education classes. And so I would rather do that. And yeah, so that was a big decision. I decided to just stay where I'm at, do what I'm doing. Okay, so anyway, nonetheless, let's get started. I wanted to talk to you a little bit about, look at my screen here. I have to remove this, bring this in here. All right. The first thing I want to do is I want to go down through we should probably go down through the open positions and make sure everything's copacetic there, because we are expecting a little bit of a pullback, but some of these markets, they ain't pulling back. And I wanted to start off with GE Vernova. Now this one here, the reason I want to start off with this one is because this is part of the 100% club. And this market is just doing something that's just so rare. I just was like, wow, look at this market go. This market, their markets just don't do this. All right. This is just really, really crazy. So I started doing my counts. And so as you can see in here, we got A1, and then the market started to rally. So this is our little lesson today I want to bring to you. And the definition of these what we're doing here is we're counting the higher highs and higher lows, right? Definition of an uptrend is higher highs. Definition of a downtrend is lower highs. So higher highs and higher lows, lower highs and lower lows. That's the definition of an uptrend and a downtrend. Again, higher highs and higher lows, that's an uptrend. Lower highs and lower lows, that's a downtrend. So part of our process of trying to determine the probabilities of a market, whether it's going to rise or fall, is all based on that higher high, lower high probability statement. All right. And then we looked for multiple drives, because we have the accumulation stage, we have the distribution stage. We also go through the drive stage. So how many drives does a market generally make, specifically going as it goes through these different drives? So these are all past performance, right? We all look at past performance, what markets have done statistically speaking over a long period of time, and how the markets work. So we've derived a special formula. Of course, I didn't make it up. It's called the Elliott wave. It's been around since the dawn of time. Lots of people trade the Elliott wave. And the Elliott wave, we've discovered, has been implemented into a lot of these big quant systems, these big firms that trade. They use the Elliott wave and I worked at the Chicago Board of Trade for about 10 years. I went back there and worked and spent a lot of time at the Board of Trade, the temple of finance. And so that's a very important place. And I was in the education department, right? That's where I spent my time, was in the education arena. And then there was the director of education. I got to know him pretty well, and he let me come and teach at the education center all the time. And then, of course, we did seminars. I had a bunch of buddies that we would do seminars with, and all kinds of really fun stuff back there in Chicago. And so I got to sit in on a lot of classes back there that I didn't have to pay for. There are people paying thousands and thousands of dollars to these classes, and I got to go to all of them for free. Not free. I mean, I had to travel to go back there, right? And I had to teach my own stuff, and I had to do all my own stuff. But I got to stay in the classes for free. I didn't have to pay the tuition. So for 10 years, just about a 10-year period of time, I'd go back there and I would get to sit in all these classes, and I would teach. Now I was there I taught trading, but I didn't really teach trading. I taught how to trade on a computer. So it's like a lot of these guys, they were closing down the pits, right? And so my job was to teach them how to take their trading strategies and adapt them to the computer so that they could trade. And then they wanted to learn how to trade on the computer. And there's a lot of things that we can do on the computer that they can't do down in the pits, right? So there was a transition stage to get these guys out of the pits, off the floors, and up onto the computers. And so my job was to help them get acclimated to the computer side of things. And so that's what I was doing back there. And so I got to sit in on all these educational classes where they were learning how to trade. And so there were all these expert traders. I mean, guys who were managing billion-dollar funds that were back there teaching these guys how to trade and how to do what they were doing, right? How to trade, how to manage these big funds. And so I got to sit in on those classes. And then I started being a part of the presentations. They let me come in and they're like, well, Land, we love your software. And so we're going to come in and we'll use your software in all these presentations. And so I would run the cameras, the projectors, and I would run the software while they were doing their presentations, and I would run my software. And they say, okay, let's look at this and let's look at that. And Land, do you have this in your software? Land, pull up the Elliott wave. Land, pull up the Fibonacci ruler. I'd pull up the Fibonacci ruler, and they would talk about it and they would teach it. And that's what I did. And so after a while, got to the point I'd been there for so long, they started letting me teach. So I'd stand up in front of the audience and then I'd say, this is a Fibonacci rule. This is an Elliott wave. And so after a while, I got to be the teacher. And then I would go around and we started doing seminars and we travel all over the country and I would get to teach. And that's how I got into this industry. And that's how I got to know all this stuff. And so I'm just here to share it with you. And that's what I'm doing. I'm just sharing this stuff with you. Been doing it now for, 30, 25 years. I've been trading for about 35 years. And then I started about 25 years ago is when I started at the Board of Trade. And then I was there for 10 years. So I've been doing this stuff a long time, got a pretty good handle on it. I'm always learning every day, always making mistakes, always wishing I knew more. But I'm about probably maybe, 10 or 15 years ahead of most guys in the Sunday school lesson manual. And so that's kind of what I'm here for, is try to share my knowledge with you and trying to help you go through your Sunday school lesson manual. I'm just about 15 years ahead of you. That's all. And so I'm still learning, still trying to make sense of all this stuff. And it's new every day. And that's why it's exciting. That's why being part of the stock market, the futures market, and this financial industry is so exciting, because it changes all the time. There's always new stuff going on. Believe it or not, it seems like, it's the same thing over and over. And it's not. It's different all the time. Every day there's something going on that's fun and new and interesting and exciting. And they just introduced these new things called yield max funds. And I'm excited about them. I've had really good luck with them, and I made some mistakes with them. And hopefully I can share those mistakes with you. I've made some mistakes in my mathematical modeling. And that's one of the things I want to share with you today, is that, I was laying in bed and I was like, I'm still not happy with my spreadsheet. You guys know, who have been here, know that we have our spreadsheet that we work on, our UBI, what we call our UBI, right? Universal Basic Income Portfolio. And so we have our UBI portfolio, and that's what I have here. This is the spreadsheet. And I worked a lot of hours on this spreadsheet, and I got it up and going, and it works pretty good. Pretty happy with this little spreadsheet. But I was still not happy with it. And I was like, there's something wrong with this spreadsheet. I can't quite put my finger on it. And so then I started doing my other spreadsheet. And I showed you this one last week too. And so I brought up this one and I started doing my other spreadsheet. This is my new spreadsheet, right? And so I started combining things a little bit different. I was like, maybe it's just the layout that's wrong. And I started putting things in a little bit different. There's not a whole lot of difference here between this one and this one. The difference is more layout, how easy it is to find this stuff. And as I was working on this spreadsheet, I just kept having a problem with it. I can't make the math work. It's not. What is wrong with this spreadsheet? And I just had long discussions with my son. Ben is he's a Series 65, Series 65, 64. I can't remember the number. He's like the what do they call it? The board exams for lawyers. He's done that for the financial industry and passed that. So he's one of those guys. So he and I have been talking about this a lot because we've been working on our new program, right? We're trying to get this spreadsheet into a program that you can connect to your brokerage firm. It pulls in all of your data and then it populates all these spreadsheet stuff. Only it's in a program on your website, on your web browser. So you don't have to sit here and enter all this information. And we've been working on it and hours and hours and hours working on the formulas and the math models and everything, and working, of course, with artificial intelligence, AI systems, ChatGPT and the others. Grok. I use Grok a lot. I like Grok. And who's the other one? The other one is Google's version. It's pretty good too. I don't use it as much as Grok, but I use AI most, or ChatGPT the most. But we've been going through those different AI systems and having it help us create some of this stuff. And I had an epiphany last night, or not last night, it was the other night. And I was like, we're doing something wrong in our spreadsheet. And so I brought it to the attention of ChatGPT, and I was like, what is wrong with my spreadsheet? He says, well, you're not doing anything wrong. You're just not doing everything you need to be doing. And so I was like, ugh, I know I'm doing it wrong. I'm not. And he's like, you're not doing it wrong. You're just not doing everything you should be doing. And so I was like, oh, okay. So went through this big, long, drawn out thing. and I've got it into my spreadsheet now. This new model, this new spreadsheet has the formula that was missing in this spreadsheet. So this spreadsheet is missing a very key important formula. And so I'm working on my new spreadsheet, and I know a lot of you guys are using this spreadsheet, and I'm going to give you, I think I've had a breakthrough. And so I'm going to be posting this new spreadsheet pretty soon. All right. And so that's what's coming. I'm going to give you this new spreadsheet with additional mathematical modeling formulas in it, which makes a big difference. It really changes a lot of things to look at it. It's just the way you look at your data. It's like the data, looking at it in a totally different way. So I'm anxious and excited to get that into your hands. That's one thing I wanted to talk to you about. And so that's coming. So get excited about that. We're going to have that. And then, of course, before long, we're going to have my son's version, which is actually in the browser. So you don't have to enter all this stuff manually. You still can. I'm going to, once we get the new software, I'm going to be lazy and I'm not going to want to keep my spreadsheet up. I'm going to just be lazy and do it in the software. But for those of you who want to just keep doing it in the spreadsheet, you can. All right, so that's one announcement. That's actually two announcements. First announcement is the spreadsheet you've got, it's got errors in it. Not errors, just not complete. Second spreadsheet, it's not complete right now either. I've got it almost there where I want it, but I'll be trying to finalize that and get that out to you. And it comes, of course, with your Pitt News Magazine subscription. So those of you who have Pitt News Magazine get all these spreadsheets for free. And it's a lot of work. I do more work on the spreadsheets than I ever do in Pitt News Magazine. So that's part of your Pitt News Magazine subscription, is that's how I get all this stuff out for you. The third announcement that we got to do, I got to do one more now. While we're doing announcements, I'll do one more announcement before we jump too deeply into the market. And I want to talk about the other announcement of something I'm making with these higher highs and higher lows. All right. And I'm making a little bit change. I don't know if it's a change, just a little bit different way of doing things, but I want to give you this other announcement. I got to do the weave like Donald Trump. They go and weave in and weave out. All right. So what it really means is they have a 10-track mind. All right. Okay. So here we go. Let's come in here. I want to show you something else. Where is it? Okay, here we go. I got like too many monitors now. Now I can't find everything. It pops up on every 10 different monitors. Okay, so we're going to come in here and I want you to go to, what is it that I want you to go to? I want you to go to landturner.setmore.com. landturner.setmore.com. All right. This is my online calendar. Now, this, many of you are familiar with. I've had it for 10, 15 years. I've been using this little program for my online calendar. And you can come in here and I have it set up so that you can come in and everybody who wants to can have a one free bull session with me. Just come and introduce yourself. Say, hey, I like coming to your classes. Here's some of my goals. These are the things I'm working on. And you can just we can get to know each other. That's what one free bull session is. We just talk about whatever your goals are, kind of help you point in one direction or another. You can ask questions, whatever you want. We just kind of get to know each other because it's fun to get to know people who are in my classes. I like to get to know you. All right. So that's the free bull session. And then, of course, for Utah Tech University, as any good university professor does, they have, we have office hours. So for my Utah Tech University classes, I have online office hours. Now, this is all online. We don't meet in person. I call you on the phone or we do a Zoom style meeting. All right. And then, of course, I have my President's Club. So this is a legacy program, President's Club. I don't really do it anymore. I was doing this when I was the owner of Gecko Software. Again, those of you, I sold that company. I don't have it anymore. So I was doing President's Club back then. So there's still members in the President's Club that I work with, but that's kind of a legacy program that's phasing out. And that was, you'd spend like $2,000 and then you and I would work one-on-one for a whole year to help you get up to speed. I'm like I said, legacy program, not really doing it much anymore. There's a few guys that still want to do it, and the guys over at Gecko Software will set you up, and I still do it for them. But it's rare. I don't do that one a lot anymore. And then we have my online self-study course, where if you buy one of my courses that are associated with the university classes, a lot of guys can't come to St. George and go to the classes, so I sell the courses online. And then, of course, I meet with you in person, well, not in person, but one-on-one over the Zoom meetings, and we help you study. And I got those study classes. So that's what that is. If you've bought one of those courses, then I study like that. But then we have guys who are just like, hey, you don't do the President's Club, don't really want to buy a whole year's worth of subscription service to you anyway. How about if I just come and we work for an hour together or 2 hours together or something? And so I set up these programs here. So it's just the paid consulting side. So if you want to just say, hey, Lan, I want to just hang out with you for half an hour and talk and ask questions, then I set that up so you can do that. And it's just $25. I try not to make it too expensive. I know there's a lot of guys that charge $100 for that, or $125 an hour or something, $150 an hour, $200. I know some guys that charge $1,000 an hour to hang out with them and talk about their finances. I'm not that guy. All right. I'm a school teacher. And so I try to make it accessible for anybody who wants. And so if you just want to come and hang out with me and talk for half an hour, it's $25. If you want to go a whole hour, I just $10 more. I mean, we're already talking, a half an hour more, throw an extra $10 in there. For $35, we can talk for a whole hour, and I'll help you with your software, and I'll help you with that. And you can, and that way you don't have to feel like you're, kind of stuck in there, having to buy a whole year's worth of that you end up never using. You maybe do it for 6 or 8 months, and then for the last 3 months you don't talk to me, and then it's like, did I get my money's worth? I don't know. So this way you can just kind of control how much time you want to talk. And so you can just come and say, well, I want to run this by Lan, and throw a little $35 bill my way, and we'll talk for an hour, and I'll help you out. So I threw that in there. If you guys want to take advantage of that, again, you just go over to lanturner.setmore.com. Setmore.com. This little screen will come up, and and I'm not selling anything. I don't have anything to sell. I mean, Pit News Magazine. You can buy Pit News Magazine, $39. Same as what you can talk to me for. You get Pit News Magazine for the same price as 1 hour of consulting. So Pit News Magazine is not really, I just do that to keep the riffraff away. Pay $39 and you can have it. That's Pit News Magazine. All right, come over here. That's what this is all about. All right, enough about that. Let's go talk about the software and about the markets. And I wanted to talk about this little thing right here that's going on with GEV. Now, the reason I want to bring this up is because this market is really crazy. And again, it goes back to the higher highs and higher lows. And because we use Heikin Ashi, we end up with a little bit of a smoothing component in here, which helps us out a little bit. I call it the cheat codes, right? And I like them, so we use them. And the next thing that I want to do is coming in here and looking at the higher highs and higher lows. The first thing we know, the A1. All right, A1 is our first breakout of the new drive. Now, we oftentimes will call this X1 or X2. This is an X2S A1. And that's because you have to count coming down the other side too. So it's a continual process of counting the wave market, so the market going through its wave patterns. Because markets generally have one up for every down, right? So they go up, they go down, they go up, they go down. And these little blue lights tell you one up for every down. Now, within each drive, so we call those drives, each up or down drive has smaller up and down drives built into them. So those are called fractal drives, right? So we have the individual drives, and then we have the fractal drives. Now, the fractal drives are the ones that, so this is a new start of a new system, all right, a new drive system. So we've come down off of this thing, and we've made one big long drive down. This is called a reset off of our previous drives that were way back here. Now, I'm not going to go way back in time and start counting forward. You can go back as far as you want to start counting forward to get to here. But once you get to this point, we start a new drive, and we start going up, and this market starts to go up. This is an X2S A1, meaning X2S is the way down. A1 is the first break to the upside. Now, sometimes this, just to give you an example, this could be an X1S. It's the first break to the short side, right? So it's the exit one. That's what that stands for, exit one. So if you're short the market and you're riding it down and you want to get out when you make your profits, right? Buy low, sell high. If you're going short, you want to sell high, buy low. So we want to buy low. So we would exit by buying, but that would be your exit point for the short side. So you're going to buy down in here to get out of your short position. You're making money when the market falls. I know it's a little bit hard concept for some people to understand. Don't worry about it. It'll come. All right. So we have X1S A1. So X1 is the first exit to the short side. And then A1 would be your first entry if the market turned and started to go up from here. but it didn't. It turned, started to go back down, made a new low. So that means this becomes your entry for a new short position, right? If you take it, it doesn't mean you have to take it. It's just that's what it is. It's if you take a short position here, your exit would be right here. So it's X2S. Short S means short, all right? So we have to put an S in here. X1S. A1. Now we don't put L1 or something for the long side. We just assume long. We identify an S for the short side. So X1SA1, and then we have X2SA1. Now, if it went down and made one more drive down, right, if it kept going down, if it went up here and then came down here and broke and started to go back up from this point, we would call this down here, obviously, this would be X3S, right, A1. And it's the A1 because it's the first break to the long side. Now, you don't know if A1 is going to ever be the first break. We oftentimes miss A1s. And the reason is because we're not sure. I always tell people, don't chase the A1s because we don't know if it's going to be an A1 or if it's just going to fail because, you know, it could fail. And you put an F on it for fail. And so A1 fail. And that would mean that it breaks and goes down. And in this case, the reason A1 would be a failure was because we're headed for an X4S A1, which is really rare. All right, so we're doing probabilities, and all we're really doing is the probabilities of the market, and that's how we count these probability statements. All right, so that's what we're doing with all these numbers. Lan, do you have this written down somewhere for me? Yes, I do. I have it all written down in a book. Hold on, I'm losing my voice. All right, yeah, I have it in a book, so you can go get the book. It's all written down. All these probability statements, how all this stuff works, is all written in a book, Stock Market Playbook of Strategies. If you don't have it, it's on Amazon, 238 pages, not very expensive, but it's really nice, 8.5 by 11, full color. You lay it out on your desk, and you can work through it. All right, it's a nice little workbook, and it's got all these probability statements. Uh-oh. What happened to all my... Oh, no, I accidentally deleted all of my... Look, I deleted all of my little things in there accidentally. When I deleted the one, I meant to delete just one. I deleted all of them. Oh, daggone it. All right, let's throw these in here real quick. We'll go through and build them all together, and I'll show you my little epiphany here. So this is X1S A1. It was the first break, and then that makes this one here X2S A1. All right, so that's X2S A1. So that's the second break. Now, the little blue lights tell us where those breaks are, and that's why those little blue lights are important. Little blue lights tell us where these breaks are. And then as we start going up, the blue lights don't break, right? They're solid, but we have breaks coming in here. So these are all, this is the first drive. This is A drive. So we're going to come in here. Now we have an A2, all right? And the A2 is where we get this first break where we're no longer making higher highs and higher lows. And then we have another break where we're no longer making higher highs and higher lows, and that's up here, and we'd call that one A3, right? So that's our A1, which is the first break, A2, which is the second break, no longer making higher highs and higher lows right there. But it doesn't break the blue light, so we have to continue higher, and we're up in here looking to make an A4. Now, here's the problem with this market. Randy making a nice comment for us there on the book. Thank you, Randy. Glad you picked up the book and glad you're enjoying it. I'm working on a second book, third, fourth, and fifth book. I'm working on so many books. Working on so many things for you guys. Brains always trying to work on something new. All right. So as we come in here, look at this. We got a situation especially showed up in this market, GEV. Now, this has been an issue for a long time, but it really started to rear its head in this particular market because of how explosive it was. Now, again, remember, the rule is always higher highs and higher lows is where we break these things, all right? So that's why we haven't, this is still above the blue light, but we had a break where we're no longer making higher highs and higher lows. We usually get 3 of those in a market. We get drive 1, drive 2, drive 3 on the smaller side and also on the bigger side. So now when it breaks the blue lights, that'll be the end of the A drive. We'll expect it to pull back, go back up, and we'll start a B drive and then a C drive. And we'll have 3 drives with little tiny drives inside of each one of those. All right, so that's called fractal drives. So we have the bigger drive, the bigger longer term trend, and then the shorter term trend. And then once you get 3 of those drives, 3 full size drives, all inside of one market, that's called a Darvas box. All right, so that's the 3 drive pattern that fulfills or one Elliott wave. All right, so each Elliott wave fits inside of a box on a longer term chart. And if you zoom the chart way out, you're going to have one Elliott wave, you'll have another Elliott wave, another Elliott wave, and those are called Darvas boxes. All right, so a Darvas box surrounds each Elliott wave. All right, so that's how we look at it. Okay, and so inside of those, you just keep going smaller and smaller and smaller and smaller. And that's what we're down here on the little small stuff right now. But that little small stuff can be big money, all right? A lot of money. So that's why we go down to these fractal sizes, okay? Especially when you're day trading and stuff. You have to be mindful of this as well. So now we have an X2, but this is a situation that rears its head all the time, but it really amplifies here on this market. We have lower highs, but we don't have lower lows. That's the little problem, right? See this little situation right here? We started getting lower highs, but we didn't get lower lows. And it's in between A2 and A3. Now, the reason we break is because you get lower highs and lower lows. That's the break. Now, it didn't break the blue light, so it's still part of the A drive, but we are getting lower highs and lower lows. We're coming into this situation where we're getting lower highs. See that? Here's another one right here. We're starting to get a little lower highs. These are called pennant formations. And so if you're familiar with the little, with all the different patterns that are in technical analysis, one of the most popular are these little pennant formations, little triangle formations. And this is where they come into play. They come into play right in between these different drives, okay? So be mindful of that. And that's what this is. The problem is it didn't break the lower low. So it didn't do both sides. It didn't do breaking of higher highs and higher lows, lower highs and lower lows. It just has lower highs but no lower lows. So it didn't break the lower lows. So that's not a new A3. So a lot of people will stumble right here, right? And they'll come in here and they'll say, oh, this must be right here an A3. But it's not. You know why it's not? Because it didn't break lower lows. It just broke lower highs. It went into this little pennant formation without ever creating a lower high. And this market is so strong, it had several of these in here. Okay, so we can't call that an A3. That's not our A3. Our A3, we have to wait for it to break both the higher highs and higher lows to become the A3. So this right here, although it might look like an A3, it's not. And so what do we call it? Well, I don't have anything to call it. I didn't go that granular. I was just like, it's a pennant formation. But I thought, why not? Let's call it something. So I started calling it an A 2.5. Is that funny or what? I thought it was funny. It's a math joke. Some people find humor in math. All right, so it's an A 2.5. Is that funny? I'm calling it an A 2.5. All right, and then this one here, up here, this is an A 3.5. A 3.5. And that's a funny joke I wanted to tell you guys. It's so funny. So I'm calling those A 3.5 and A 2.5 because they're not breaking the lows. They're breaking the highs. They're not breaking the lows. So we've got an A 3.5. How about that? It's not in the manual. I just started doing this because of this one GEV market that's just really has a bunch of these things in it, where the market's so strong, all these little half pints in here. And we still look at this. The market is just unreal. So we're in the third drive, and it's, we got the A2, so the first drive, second drive where we broke the lower highs, higher lows, and lower highs, and then we're still up here waiting to break up here in the third drive. Where do we think it's going to go once it does break? Well, this market's so strong. I've seen really strong markets like this. They don't come back all the way back into the Fibonacci sweet spot. So when they do finally break the blue lights, which they will, I guarantee it. Guarantee it. There's not a market in the world yet that has not broke the blue lights. All right. I mean, this one hasn't broke the blue lights, but it will. Guaranteed. It will eventually break those blue lights. All right. And when it does, it will come back down, and we anticipate it coming back down. The first Fibonacci number is that 38.2, which is why I've made it really nice and bright and dark here for you. 50% is actually not a Fibonacci number, believe it or not. All right, we put it in there because the market likes to come back down into what we call the Fibonacci delta cone of probability, right? It's the one standard deviation, which I have here for you. The one standard deviation, and none of you have ever seen this image, but I'll show it to you anyway. It's the approximately 68.2% of the market stays within the one standard deviation of the mean. So what we're doing with the Fibonacci ruler is we're measuring this one standard deviation. All right. So around 95.4% of the time it falls in two standard deviations, and 99.7 times it stays within that third standard deviation, which is why I can guarantee you, I can damn well guarantee you that it's going to break those blue lights. All right. Because 99.7% of the time, which is really, I mean, let's be honest, it's going to be 100% of the time it's going to break those blue lights. All right, this is also known, I call it the delta cone of probability just because it makes it easier, and it's based on delta, which is part of the options strategy. I'm not going to get into all that right now, but I call it the delta cone of probability. The real name is the 68, 95, 99.7 empirical data distribution rule. If you want to look it up, ask ChatGPT about it, give you more information. You can go put that in there, but that's what you need to ask it about, the 68, 95, 99.7 empirical distribution rule, and it'll give you this model right here. All right. So that is what we're working off of when we do the Fibonacci retracement levels. And I need to remove that, add that. Okay. So now that's where we're expecting this market to come back down to. And statistically speaking, right, it does it after the third drive. So we get a third drive, and then that's the end. It'll break the lights and then come down here. Now, it doesn't mean it can't go to A4, A5, A6, A7, A9. It can. It just really super rare. So when we're trading, we're working on the probabilities. And so we're expecting GEV to come back down. And it's a real strong market, so it may not come down any further than 38.2, which is our first Fibonacci number, and turn and start to go back up and start making those fractal waves again to the upside. And then we would be in the next drive system, right? So we would be in the B1. So this would be a B1 when we come in here and we break and we start to go higher again. So that's how we do that. We start going through the whole same process again, B1, B2, B3. We may get some B3.5s, B2.5s, B1.5s. I thought it was just funny. And so I wanted to show you that I've been doing that lately. Okay, so that's what we're doing. That's how we count them, and that's how we figure out how to make so much money. All right, that's why we're all rich, rich, rich beyond our wildest dreams, because we figured this out. And so we can make these trading decisions: buy low, sell high, buy back in down here, sell back up in here, right? It's the accumulation distribution model. Buy low. That's what the accumulation distribution model is. Buy when we're in the accumulation stage. That's what this indicator here is, chalk and money flow. Let me turn off MACD just to get rid of the confusion. Okay, this is chalk and money flow. And I've turned these colors here. Look, I've come in here. These are the settings for my chalk and money flow. Notice right here that I have reverse formula. So I like to do the reverse formula, and then I'm going to hit save as my defaults, update all chalk and money flows. And the reason is because it just changes the formula into the accumulation distribution model. All right. So this is where we're going to buy into markets when it's green down here. This is where we're going to sell out of our markets when it's red up there. All right. Get rid of your stuff. Buy in here, sell out here. Buy in here, sell out here. It's called the accumulation distribution model. Now, you can say, well, I'm going to hang on to it for the long haul. All right, well, that's fine. That means you're going to have to sit through a drawdown, which is okay. And then you can anticipate a B1. I wouldn't do this on a C drive. I wouldn't say, hey, I'm at the top of a C drive. I'm going to hang on to the next drive, because you might be hanging on for the next 5 years before it comes back up and breaks that drive again. So at the top of a C3, I'd probably be getting out. All right. The probabilities of that thing going any higher are so low, and the time that it's going to take for it to come back down and retrace and go back up and create another A1, A2, A3 and break above the previous high and get you back to break even, is the probabilities, not that they're not there. Certainly, over a long period of time, markets do have a tendency to rise, but the probability of the time that it's going to take to do that, you could have been putting your money to work somewhere else. So that's why you need to understand, I'm just going to buy and hold forever, Land. Okay, we'll do that. But then this is the wrong class for you. You shouldn't be in this class, because this class is about making money, not about holding on for the rest of your life. What good is that going to do you? The only way you make money is to sell your product that you buy, right? Anytime you go into business, You buy something and then you put it on the shelf, and the way you make money is you sell it. Oh, I've opened up my store and I put all this stuff on the sure store, but I ain't selling any of it. Lock the doors. Don't let anybody buy any of my stuff that I bought. That's not a very bright business plan. You want to sell your inventory. If you buy a bunch of GE Vernova inventory at a low price, $300 a share, $300 for this can of Genova, and you put it on the shelf and you lock the doors and say nobody can come and buy my Genova can of Genova that I spent $300 for to be an inventory item in my store, and then you lock the doors and don't let anybody come in and pay you $350 for it, how are you going to make money? Did any of you ever think about trading like that? Your shares are inventory in your store. You need to buy inventory and you need to sell inventory. And the more money you make is how fast. It's called the float, all right? How fast you can move that float back and forth, all right? And it's even in the software. We can come and call it the float. Let me see if I can pull up I'm having such a hard time with these programs right now. We're going to come in here and we're going to go over to www.finviz.com. Finviz.com. All right. Uh-oh. That's not true. That is... How did I get this pop up? Well, that was not true. So let's try this again. Did you guys hear that? Did you see that? All right, let's try it with this one, this browser. Okay, so we're going to come in here and we're going to go finviz.com. All right, so we're in finviz.com. And if you come in and we're going to go to GEV. GE Vernova. All right. And right here, this is the float. Can you guys still hear me? I had that little pop-up on that other browser that's not working very good. All right. So you got the float right here. See this? Shares float outstanding, 272.93 M. This is a thing that you guys should be aware of, is the float. All right. That's how many shares are available to trade. Let me, if I can make, I need to make me bigger here. All right. So that is the float. Sound is still good. All right. Kirk says we're still with you. I don't know what happened with that other thing. I typed in a bad URL, I guess. So anyway, we are talking about the float, which is your inventory. All right. So float is the inventory, the number of shares that are available for you to buy. That's the float, but you have your own float. All right. Your own float. You call it your float if you want to. It's like I call it your inventory. All right. So your inventory are the number of shares that you buy. So your shares that you buy are the inventory, and you have to buy and sell your inventory. You want to turn those inventories over so that you can make money. Because if you don't turn your inventory over, you don't make any money. Does that make sense? How many of you have ever owned a retail store or had a product to sell? Well, you buy it, create, manufacture, whatever it is, and you want to turn those over as fast as you can, because that's how you make money. It's the same thing in the stock market. When you buy an inventory, you buy some GE Vernova, you're like, well, it'll go up in value. Well, that's what you're going to sell it for. But the only way you make money is to sell it higher than you bought it for. So it's your inventory. Sell it, and then you want to buy some other inventory. You don't have to buy the same inventory over again. Buy some different inventory that's low price and looks like it's on its way up, and then you sell that inventory. All right, that's how you make money. So, oh, but land, if I sell it, then I have to pay taxes on it. Well, if you open up a coffee shop and you go sell coffee, every time you sell a cup of coffee, you have to pay taxes on it. That's the way it works. That's just life. Pay taxes. I know it sucks. We all have to pay taxes, but that's how you make money, is by turning your product over. And if all you want to do is buy and hold, you're in the wrong class. All right. There's another channel over there that does buy and hold. Go talk to that guy. I don't buy and hold. All right. We make money. We're in business to make money. We switch over, we do inventory, and we got to pay taxes. My tax bill last year was $150,000. All right. I paid more in taxes last year than probably Warren Buffett. Why? Because Warren Buffett doesn't ever sell, I guess. I don't know. He does sell. He sold out a whole bunch the other day. He said he got out of the whole market because he thinks the whole market's going to tank and die. And Warren Buffett, he was right about it, right? He got out, but we all got out too. We were smart enough not to get in during this big downtrend. But Warren Buffett didn't get back in. He's still not in the market very much. He's missing this big run. Why? Because he doesn't like Trump, and so he's not going to take advantage of the Trump run. We talked about that last week too. All right, that was our Sunday school lesson last week, remember? And Warren Buffett's fallen into that category. He's a strong, hardcore Democrat, so he's not happy with what Trump is doing, and so he wouldn't put his money back in the market, and the market ran, and he missed it. Not that he doesn't have a whole bunch of money still in the market anyway. He still does. He just took a very large percentage of it out, and he missed this whole big run. So anyway, that's, it is what it is. Not everybody's perfect, not even Warren Buffett. So we come in here and we're looking for this retracement back to B1. Okay, that was my lesson, and I got distracted. So now let's get back to what we were talking about. Now I want to go back down, and I'm not going to go down through the 100% club because I just went through this Genova to teach you that lesson. And I want to go through our portfolio before we have to call it quits. All right, so let's go to the portfolio. Let's make sure that we got everything open. Go Control A, restart. Let's see, open charts. Okay, we're going to make sure we got all our charts open. Looks like we got all of them open. All right. Now, wait a second. It opened one in the Tesla. We must have got, did we get out of Tesla? How come? Well, let's analyze Tesla. Why don't we have a position in Tesla? I don't know what happened there. Did we get, maybe closed? I wonder did we have a position in Tesla? I thought we had options in Tesla. You know what happened? We might have got our long position taken away because we had a sold call. Okay, so anyway, this is your drive one, all right? And we did this Tesla chart before. So let's start with Tesla, and I'll show you why we're not going to get into Tesla right now. Everybody's like, get in Tesla. Oh my gosh, it's going, get in. No, why? We missed the opportunity to buy our inventory of Tesla. If we are not in Tesla already, you can't get in right now. And I'll show you why. This was our X1S A1, right? We never get in on an X1S A1. Why, Lan? Because the probabilities of that going up from there is really super low. All right? No X1S A1s. We don't do X1S A1. So never get into an X1S A1. X2S A1, you can get into an X2S A1. They're not too bad, all right? Better than half. So X2S A1 is right here. So this is X2S A1, X2S A1. And then this right here, because we broke the low, well, we didn't really, we just come down. Yeah, we did. That's when we were laughing at. I think it came right down and it barely broke it. And so this ends up being X3S A1. And we love X3S A1. X3S A1, back the truck up, sell the farm, sell the kids, sell everything, and put it into whatever is giving you an X3S A1. This is where you take a big risk. This is like, okay, I got double aces, man. I got two aces. And the dealer has a 9 showing. All right, so this is a high probability. This is when you're playing blackjack and you have 2 aces in your hand. This is where you double up, triple up, sell the farm, sell the house, sell everything, put it into this market, buy your inventory. All right, So that's X3SA1, high probability of success. Doesn't mean it is, the dealer could get a 21 and you have only got a 20. But that is a high success rate. And then we come in with our next little drive right there, right? A little pennant formation, higher highs and higher lows, lower highs and lower lows. So we broke still above the blue light, and we end up with X, or not X. This is now an A2. All right, so that's your A1. This becomes your A2. So that's where we're at in Tesla right now. That's an A2. And then we got higher highs and higher lows. Look, we broke higher highs, no longer higher highs, no longer higher lows. Therefore, we're going to come in here and we're going to call this one right here. This is an X3, not X, A3, straight up A3. What's the probabilities of A3 going higher? Well, it's pretty good. It's not bad. I mean, it's not good. It's not great, but the chance of it going higher is probably going to go higher. So you get your 3 drive pattern. This is drive 1. This is drive 2, and now we're going into drive 3. Now, I never want to buy into, for the first time, I don't want to be the first time buying into A3. You can add on to an A3. If you're already in the market and you've got some shares or you got an option in here, you can add on at A3. And the reason you can add on at A3 is because it's going to dollar cost average you from way down here, and it's going to pull your average up. And that's okay as long as it doesn't come up above the blue lights. All right. But remember, if you buy it, you're buying high and you got to sell higher, but you got an average price. So you can add on in there. Just be careful because it's not going to go very far. It's going to go up and make that third drive. And how far is it going to go? Well, we can make Fibonacci projections. All right. So we go off of here and we just grab this low point right in here and this high point right in here, back to here. And we say, well, it's going to probably come right up into this region here. We're going to anticipate probabilities brings it right up into this region here. So we may be right up into here somewhere. All right. And that's where we think this market's going to get to. So we might see Tesla, and that's 61.8 is right up in there. There's 61.8 on the projection scale. Now, of course, we do have 130.9, which is the golden ratio. But usually, I don't know. We might see it way up there. I don't think so. I don't think we'll see it go that high without breaking the blue lights. But it may. It's an A3, and it can go until it breaks the blue lights. That's the next drop that we want to see. Want to see it intercept those blue lights and break. And wherever that is where we're going to draw our Fibonacci ruler. So we draw our Fibonacci ruler from the low to wherever that high ends up. Let's just put it right on 100 right now. And we're going to say that market goes up to 100 and then breaks. It's going to break those blue lights. It'll probably come back down into this region here, which is probably where it's at about right now. So it'll probably come back to a 38.2. Maybe it might come back down to 50% or back down to 61.8. Remember, 50% is not a Fibonacci number. It's just, it's in there because it's part of the Fibonacci sweet spot, which is between 38.2 and 61.8. It's, it's the 50% level. It's important. It's down there. But that's the Fibonacci Delta Cone of probability. So that's what we're going to expect. We're going to expect this market to go up and come back down into here and then go back, start up again. And then that's going to go into when it breaks those blue lights, and then the blue lights flip and go back to the upside again. That's going to be your B1. And we're going to expect Tesla to just keep right on going up and creating a whole new Darvas box. All right. So can't buy in here unless you want to. I mean, you can buy in here because it is still the A drive. I wouldn't start a new one here, but and then you can sit through it, but it just anticipates it's going to probably come back down to your break-even point. If you got in here, you can probably ride it up and then you're going to sit through it, come all the way back down here, or you could ride into it and ride it up there and then get out up here. There's lots of things you can do. So that's just, as long as you kind of figure that's what the market's going to do, you can play whatever strategy you want. Short-term strategy, ride it up there, take your money, make a big bunch of money. Who cares, right? Whatever. Do what you want. I'm not going to tell you what to do. I'm telling you how to read the probabilities of the market. So it's like I'm teaching you blackjack. Does it mean it's going to do it every time? Does it mean that your cards are going to work out at the same time just because I'm showing you the odds of blackjack? No. You got to play it like a blackjack game. I'm telling you all the time. I say it every day. This is just a carnival game. Right? It's a carnival game, and Tesla is just one of the tents along the fairway. So you want to play this tent right here and throw your darts at the balloon? That's what you're doing. It's all a carnival game. Don't think that the stock market is anything other than a carnival game, because we're all playing a carnival game. It's who can play the carnival game the best and beat the fairway, right? Who can beat the carnival? Because the carnival is here to take your money. You're here to take their money. Who's going to win? The odds are always against you, right? Just like any carnival game. They put the odds in their favor, just like the casino in Las Vegas. The odds are not in your favor of winning. So you got to do everything you can to put the odds in your favor by looking at these probabilities, okay? All right, come in here, SMC. This is where we're at with this one. Same thing. We got a third drive pattern, drive 1, drive 2, drive 3. Not very pretty, but it is what it is. All right, you can't make it pretty every time. Not every market is pretty. Some markets are not very pretty. But this one here has an X3SA1 right here, X3SA1. And so X3SA1, it is what it is. And back the truck up if you want to. It wasn't very pretty, so you're probably not going to back the truck up with a full load. So it got in there, though, but it is what it is, and it's working out. So we're coming in here, and there we're breaking first candle to break a new high right there, higher highs and higher lows. Today is your first candle to break a new high on a probability of A2. So if it's an A2, that's pretty good. We'll buy that. We'll buy that. Do we have some in here? We already have some. We could buy some more. All right. We might dollar cost average in. How many do we have? Let's see. We bought some shares here. We're long 3. Are we only long 3 shares? This is one of those little, but we got an option in here. Let's come in here. We'll go into all. No, we'll go into chart. What do we got here? We bought 33 shares. I couldn't see the 3 in there. So we got 33 shares. Current value, we got $1,400 in there. We're up $253 on our shares. We're up $8,400 on our long call. Now, I don't want to be buying I got a long call. I don't want to be buying a short call here, selling a short call here. I don't want to be doing a covered call in here, a poor man's covered call, because this is starting to rally. All right. You want to put your short man's covered call in when it's up here and anticipating the pullback. But when we're down here and it's starting to go up, you don't want to put you don't want to sell a call because it's going to go against your position. So don't do that. All right. Wait for the market to come to you, and then you can go put your call on. So right now we're going to sit here, and we're going to anticipate another rally in the market on this particular chart. Super Micro's breaking first candle, break a new high on an A2. Yeah, we'll take some of that. You can get pretty aggressive if you want to. We could bring our average price right up to underneath this level here if we don't think it's going to break that. And that doesn't mean it can. It can turn around and come back down. We oftentimes get a pattern where we'll get a little pattern that looks like this, and they're kind of a pain in the hiney, but they do it because they want to break your stride. So they come in here, they go up, they start looking like first candle break a new high, but then it comes back down, breaks this low, and it does it just to take your stops out, and then it turns and goes from there. So it gets this little going down in here, and that's what happens with these sometimes on these little drives. So you have to be careful of that. So they give you this, what we call it ends up being like a little triangle formation, all right, with a false breakout to the bottom side. And it does that just to break your stops that you put below that low bar right there. So they know that that's what's happening, right? The other side of the market, the casino or the fairway guys, the carnival guys, that's the carnival game they play. So they know that you're going to get in right here, first candle break a new high, and then so sometimes they'll fluff it and come back down, take your stop out, only to turn and go without you. You ever had that happen? Happens all the time, right? That's the way the game is played. So as long as you realize that that's the way the game is played, you can play against it. You can say, well, I'm not going to get in on this first candle because it might go up and just come back down, stop everybody out, and go on that one. I'll get on the next one, on the break above this next high, on this little triangle rather than on the pennant. Pennant is this one here, right? So you got the pennant that comes down here. That's the pennant. If it goes up and breaks, it comes back down into the pennant. Well, then it's going to come down here and stop everybody out. It becomes a triangle. So that's the pennant. This is the triangle or wedge. Okay, wedge pattern. All right, and then it goes up from there. So then the A2 gets kind of screwed up, and you're like, well, the A2's down here. All right, but is it actually A2? Yeah, it's A2. A2. So anyway, that's the way you have to look at it. Just be mindful. So you can add in right here in anticipation of a strong market. Do we think it's going to be a strong market? We think it's going to be a little bit weak, come back down and break us. I think it's going to go. I don't think we haven't seen a lot of the triangle wedges in this market because the market's been really strong. Now, Super Micro not been so strong, but we're going to do it anyway. All right, we're going to come in here and we're going to take the chance that this is going to be the bottom, and we're going to come in. I'm just going to do one at a time. Actually, let's do a couple at a time. And we'll come in here and we'll buy the market, and we'll just keep buying the market until our average gets to where we want it. Keep going, keep going, keep going, keep going, keep going. Right there. That's close enough. Anything, or you want to do one more? We put just one in there. Okay, so that brings our average price up just underneath that low bar. See that? I'm going to make this a little bigger so you guys can maybe see a little better what I'm trying to do here. So now we added in a bunch. Now, so we went from 33 to 59. Let's give her one more, just go even 60. There we go. So we got 60 shares now, and we had 33, and we're going to delete that stop. And now we're going to come in here with our 60 shares. And we can do this. We can say, I'm going to go with 30, 79, 30, and we're going to go stop, and we're going to put right here at there, we're going to take 30 off, and we'll put another 30 down here on the blue light. All right. That way, if it does come down and stops us out, we don't lose anything on the 30 we just added, and we still have our stop on the blue light for the remaining 30. All right, in case the market just flushes and decides it wants to die on us altogether. So that's how we're going to play that. So we don't lose any money. We keep our inventory, right? We bought some more inventory, and we'll sell out our inventory at break even on this one. We'll sell out our inventory. We'll take a loss on it if we do this one. But we're going to anticipate this market's going to continue higher from here. Okay, that's the way we're going to play that one. We still got our long call in here, making some money, and we're only in the first drive still. The first pullback of the first drive. So there's our natural trend line, our progressive trend line. And we're going to put that right there, just like that, and line this up, boop, just like that. There's our progressive trend line. That's our first mountain. All right, so let's get rid of this little thing here, and we'll draw it this way this time. Doot, 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 just like that. Uh-oh, I grabbed the wrong tool. Oh, well, that's kind of cool. You got the little flags on there. Let's use this one here. This one. Maybe I'll start using that one. That was kind of cool. I like that one. All right, so there's we go. There's our first little mountain. We're going to actually go for 3 mountains, right? We're going to look for another one up here. Break the previous high, pull back, break the go up, make a third mountain. So that's what we're looking for. We want to see a 3-drive pattern up that natural trend line. Now, is it going to stay above that natural trend line? We don't know. We might have to make some adjustments. Might go a little faster, and we'll have a natural trend line that goes a little steeper. Might go a little slower. We'll have to move another trend line out in here. We don't know. We don't know what it's going to do. As long as it stays above the blue light, we're happy. All right. Okay, so that's what we're going to do there. Let's go to the next one. Let's go to NVIDIA. NVIDIA, we're up $10,000, and we're breaking higher once again. Oh, we have a call here that we sold. Are we making money on it? Yeah, we're making $162. It's starting to go up. We got to get rid of that, liquidate that option. We got to take that profit off. Put it on your spreadsheet. Make sure you put this on your spreadsheet. All right, so we take that off. So that was a closed out profit on that one of $150. That's just a quick little option that we sold on that pullback right in there, right? So we were anticipating that pullback, and it started to rally, so we had to take that off. We still got this one up here. We're going to leave that on. It's, I don't know what's going to happen to it. Nobody knows. Nobody knows. All right, but we can put our odds in there. So we got our nice little trend line coming up through here. We'll just draw it like that. And this looks like our first little mountain here. So that's our first little mountain. So that means that this is A1 back in here. That would mean this is going to be A2 in here. All right. And we got an we got an A2.5 right there. An A2.5 right there. Oh, no, I guess it's not an A2.5. It broke the low. We're going to call it A2.5 anyway, because it's too close to the A2. I think it's just all part of one little mountain drive right in here. I don't know. That got all screwed up, didn't it? Anyway, we're going to call this one right up here A3. I'm going to call that A3. And then the reason I'm going to call that A3 is because on several other markets that follow, this was the A3 on them. This one's not as pretty. You could, I don't know. Maybe we call it this A3. This is an A2. A2, A1. A1's down there. I don't know. I'm going to call this A2. This is going to be A1.5. We don't know. We're fudging it, man. We got hindsight. 1.5, and I'm going to call this one back here. I'm going to call this one. I'm going to call this A1. So the A1, I always want to call the one before the blue light. The one the blue light break is the A1, because look at this. This is, you got drive 1, drive 2, drive 3. So that means that's A1. But this little thing right here pulled back, that would be A2. And then that would be A3. And then we have this. No, probably not. So let's call this A1. And then this is A1.5. And then we're going to call that A2. Is that A2? I guess. And then that big long drive up there was all one big A2 because lower highs. Look at all the lows. They were all higher highs, higher lows, higher lows, higher lows, higher lows, higher lows. Right there, we broke. So that's going to be the A3 because it's starting to head up one more time. You could say, well, Lan, I think you should call this the A1, this is the A2, the A3, and that's an A4. Okay, do that. That makes no difference. It's just how you want to count it. And then we're going to come in. The real thing is, where is it going to break the blue lights? Because we just know we can't buy up in here. It's too damn high. There's no way we can buy up in there. The probabilities of this thing coming back are too high. It's going to be really hard to make money up in there. It might go up a little bit, but it's hard. So if you want to trade hard, buy up there. If you want to trade easy, buy down here. So that's the whole thing we're trying to do, right? And then we think it's going to come back somewhere into the delta cone of probability. So depending on where this ends up, maybe it ends up in here, and we could do a Fibonacci projection, but it's really hard because this market's not really, where are you going to get a projection off of that thing? Who knows? That thing's really hard to project. Let's go off of this really bottom, the very bottom here, 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 here. Ooh, that thing went up. 161.8. There's 130.9 right there. 161.8 is where we're at, kind of right up in here. I don't know. It's just way high. It's way up on that Fibonacci scale, no matter how you measure it, which is too high for us to buy. We don't want to buy high and sell higher. That's a really hard strategy. I like to buy low and sell high. So I'm going to wait for it. There's lots of other markets that I can trade. I'm not feeling like I have to be into NVIDIA. Okay, so I'm going to just wait for it to break the blue lights, come back down, maybe that 31.8 or 38.2, maybe the 61.8, and then we just start adding in 20% of our portfolio, or 20% of what we have set aside for NVIDIA. So if you have $100,000 set aside, you might put 20 grand in here, another 20 grand in here, another 20 grand in here as it pulls back against these numbers. And then as it starts to rally, you can put in another 20, and whatever. And then you kind of build up your position right down in here. And you'll notice that this will be all nice and green down in here. And that's what we're looking for. We want this to match up with a nice green spot down here. And then we'll be happy, happy, happy. All right. That CMF is not flipped. Boop, like that. Save, update, all. See, so you're selling right now. We're trying to sell out of our position. We're selling our inventory up in here to make money. Come on, move that. It's not going to let me. These got locked in there. Let's go back, turn those off. Kill these. Go back, flip that back on, reverse. Okay, so this is sell out. That's what that's telling you. This is sell out, sell out, sell out. That's why I turned the colors red so you can tell. Makes it easier. All right, and then this is buy in, buy here, buy here. So we want to see this thing pull back into this little Fibonacci sweet spot. This will then go green, 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 saying accumulate, accumulate, accumulate. You can see your MACD's already flipped over on the top up here. Okay, so this is going from green to red, and it's going back up, so it'll probably go back to green again. But we don't know how high that's going to go. I just don't think it's going to go very high before it breaks those blue lights and comes back down. All right, so let's go to Cisco. Cisco, same thing. Look, it's going to break those blue lights. I guarantee it. Oh, we sold a call right here. Are we up on that? $10. And it's starting to rally, so it didn't pull back as far. I thought maybe we'd get a break right there. Let's just go ahead and liquidate that option. Take our $10. At least we're not going to lose. Oh, let's see. I would make it $10 on it. Okay, it's starting to go back up. I thought we'd get a break right there, and that would call would make more money. But how come that CMF is not? I want to hit save, update all CMFs, update all CMFs, update all CMFs. How come that thing won't stay over there? I told it to update all CMFs to be this same color, and it's not. Save as my default, save as my defaults, update all, update all. It should put that on all of our charts now. Okay, so it's red. I'm just waiting for it to break the blue lights. Just look at how these charts are amazing. Amazing. This is a Trump train. I just declare it right now. We're on the Trump train. Holy cow, look at this thing. Higher highs, higher lows, higher lows, higher lows, higher lows, higher lows, higher lows, higher lows. One right there. So this is, you want to count it? Let's just do a quick count on it. This is the peak. So this is an X1SA1, X2SA1, and then the thing blasted off and went to the moon. So this is your A1 right here. This is your A1. It's actually an X2SA1, right? X2SA1. So that's your probabilities on that one. And up that baby went. Holy cow. And now what is that? What is that? We didn't even get one break in here for a lower high. That's unreal. That's unreal. It is what it is. You got to call it what it is. You can't, there's no question about this one. There is no question. There's no fudging this one. It's too perfect. That is an A2. That is an A2, and I hate it. I hate it being A2 because A2s I'll buy. I like A2s, but there's no way I'm buying that. It's too close to the blue lights. There's no way I'm buying that. Holy smokeroos. But I don't want to, I had to get rid of my long call because that's a signal that the market's going to go higher. We still got this one up here. I still think we're okay with that one. This is our vertical spread that we put on. Wow, this thing is so powerful. Look at that Cisco go. Look at Cisco go. And it's got to break blue lights. And where is it going to do it? Nobody knows. Let's come in here and put our Fibonacci ruler in here. And that high right there, that little spiker right there is where I'm putting that. And of course, we would expect it to break the blue lights and come back down into this region here somewhere, probably 38.2. This is a strong market. It might bounce off 38.2. It might not give us a 50 or a 61.8. We don't know. Nobody knows. All carnival game. Okay. Depends on where Aladdin wants to get into this thing. It's all about the big quants. Okay. So now, oh, look. I told you it breaks the blue lights. I told you. Guaranteed it, didn't I? I said it will break the blue lights eventually. I said it will break those blue lights. All right, so here's our X1SA1, X2SA1, X3SA1. All right, and it took off. Now where are we at? Len, it's going to flush all the way down to a toilet way down here. No, it's not. No, it's not. This is Aladdin going through its accumulation stage. Where is our Fibonacci ruler? How come I can't find it? There it is. This is Aladdin going through its Fibonacci stage. It's coming down. Look at this, like a train on rails. How many times have I said it's going to come back down into that Fibonacci sweet spot? There's that first 38.2, comes down, touches that number. It could, if this is a strong market, which Salesforce is, it could bounce off at 38.2 and start to go back up. But we don't have to make that decision. Why? Because we have a blue light system, and the blue light system will tell us. It will cross that blue light system. I guarantee it. It has to. It has no choice. It will cross that blue light system at some point, whether it's here or way down here. It will cross that blue light system. It has to. All right. So we have a natural trend line coming in here. We got the blue lights. You can't see them. They're kind of hiding up in there, but they're up there. They're up there right in there. See them? The text in there is in the way, but there they are. Look, you can see them right there. There they are. Three little blue lights. Three little blue lights hiding up in there. All right. They're a little scared right now. But that market's coming down. Those blue lights will come in and that market will intercept and away it'll go. All right. So it's coming down in here. We're at the first 38.2. That's a safe place to start doing some accumulation. Look right here. Green, green, green. Buy, buy, buy. We're in the green buy zone. Okay. You can buy right here. It's a little early back in here. I don't want to be buying up in there. I will wait for it to come back here. So we're in the buy zone right in here. So we're going to get ready to buy. Buy, buy, buy. Okay. Put your first 20% in here. If it comes down here, put another 20% in. Comes down here, put another 20% in. And then you'll have a good position going into the B drive. All right. So that's the end of the A drive. So here's the B drive. So this will be a B1 when it crosses the blue lights. When it crosses those blue lights down in this, well, it's here. It's here now. It's here now. It's in the Fibonacci sweet spot. It's the very top of it, but it's there at 38.2. Really popular for markets to go to 38.2 and turn strong markets to come to 38.2 and then take off from there. But if we can get it to come back into 50 and 61, we can really load up. We can back the truck up. All right. There's a good buy recommendation for you right there. Put a little bit in right there. Let's do it. Don't just talk about it, Lan. Do it. How many? $275. That would be $27,000 we got. We don't know if we want to put that much in. Let's say we want to put into this market. Let's say we want to put $10,000 in. All right. If we want to put $10,000 in this market, let's put 20% of 10,000. So we're going to put, let's see what number $10,000 in shares would be. Oh, went too far. 7,000, 8,000, 9,000, 10. Okay, so that's 37 shares. Let's say it's 40 shares. So rather than 40 shares, we're going to put in, let's just put in 10 shares. That would be good right here. I think we'll put in 10 shares. All right, so we're just going to go ahead and buy 10 shares. And then what we're going to do is we're going to say we're going to put a limit order in. All right, and we're going to say if it comes down here close to 50%, we'll put another 10 shares in. If it comes down here to 61.8, we'll put, if it goes down there, 10, 20, and we said we're going to put up to, what do we say, 40 shares? That was 10, 20. Let's put 20 shares in. 20, 30, that would be our whole thing. Yeah, we'll do it. Let's put 20 shares in, 70, 80, 90, 20, on a limit at 61.8. If it comes down there, we'll get our full, that would be our full Monty, 40, 20, 30, 40. That'd be 40 shares. That would be our full entry into Salesforce if we could get it to come down there. Now, Lan, what if it doesn't come clear down there? Well, if it starts to bounce and go back up, you've always got your B1, you got your B2, you could put some more in. You got your B3, but B3 you could put some more in because you've already got some in at B1. But we're trying to get a little bit more in. We like to buy low, right? We don't like to buy those. We like to buy it as it comes back down. Okay, so that's what we're going to do there. Let's go into BMY. Bristol Myers. This is that shitty word that we're not happy with. It's our little Head and Shoulders, left shoulder. We're looking for this thing. There's our necklines. Broke those blue lights. There's a little right shoulder in there right now. Is that going to be all we're going to get for a right shoulder? Maybe. It's getting ready to rally right here. We sold this. We should get it. We're up 121 bucks on that. We're down nasty on this one, $2,000. But it's got it's only got 80 days left. Ugh. I don't know how we're going to ever survive with this one. We sold a whole bunch of calls, so we're not actually down $2,000. We're like down 1,000. We've made like $1,000 in options, and we got most of it over on a spreadsheet. I'm getting lazy. It's not doing my spreadsheet work for the demo account. Let's see. If we go out to 20 days and we sell a call up in here, how much can we get? Hardly nothing. Look at that, $92, $100. I don't want to do it there though. We could sell another put. I don't think we're going to get it. I don't think it's going to come down here. I think it's going to go up from here. I think we're going to see Bristol Myers start to go up. Is it going to go? I don't know. Hell, I don't know. What do you do when you don't know? Nothing. Don't do anything. All right. Oh, look, it broke the blue lights. I told you it would. I guaranteed it, didn't I? Guaranteed it's going to break those blue lights. And it did. All right. So this is AppLovin. AppLovin. Oh, we don't have anything on AppLovin. Uh-oh. I wonder why not. Didn't we have a call option on AppLovin? I can't look at anything other than today's. I don't have a history on it. I thought we had something on AppLovin. That's why it's in here. Must have taken it off. We must have had a sold call that got covered and they took off our position. Well, that sucks. Well, we probably made a bunch of money on it. So this is an X2SA1. That's an X2SA1 right there. That's an X1SA1. Don't take X1SA1. X2SA1. You can take those. And we got a nice little natural trend line right straight up there. And there's where it broke the blue lights, right? When those two come together. It's not pulling back. It's not pulling back. We're not getting an opportunity to get into this thing at the lower point. We want to get into this again right down in here. And it just broke the blue lights and started to rally again today. Well, that sucks. That right there is a B1. It could be. It hasn't broke the blue lights yet, so it's not confirmed to be one. So until it breaks the blue lights going to the upside, it's not a B1. So we'll put a question mark on it. Is that going to be a B1? I don't know. It's got to break those blue lights to be a B1. But it might just turn flush here. And if it does, that would be nice. We would like to see that. We would like to see it flush here, come down to 38.2, at least 38.2, where we could start getting back in, right? Put a little bit more in at 50, put a little bit more in at 61, we'd be all in. Maybe 20, 30, 40, and then we could, you know, if it started to rally, you put another in at 50 and another in at 38.2 again. So that's how you enter on the way down and back on the way back up to get it all in. But this thing's getting ready to break now. We can't get in right here because it's still high. It looks like it might be a B1. And if it was, you could put in right there. You could say, oh, I think it's going to go from here. I think it's just going to break those blue lights. It's going to take off and go to the moon because this is AppLovin. And AppLovin is a powerful company. And I know it's going to go up. Well, go ahead and buy some right there. It's the beginning of the B1. Problem is you're right there in neutral zone between the B1 and the what is that? It's an X1, right? It's an X1. So that's your first exit to the short side. See, that's your X1 right there. X1. And you want to be fancy? Okay, it's X1 long, but we don't really say that, right? X1. So it would be an A1S. You want to get fancy? That's an A1S. X1, A1S. Do we take X1, A1s? Heck no. Those are low probability of success. So you don't ever want to take a short position here because it's probably going to go up from there. That's the same as this one here. It's just it's the mirror image of this one over here, which is X1S A1, right? So there you go. There's your X1S A1 over here. How come you can't make that work, Lan? Because it's right behind the camera. X1S A1 right there. So that's turn off the auto scale. X1S A1 right there. So this is X1 A1S. See that? Mirror image. Those are the two same drives. One's for the short side, one's for the long side. You want to take it? No. You don't want to take it to the short side. You want to take it to the long side. That's the question. Not yet. Let's wait. AMD. Ooh, AMD's doing the same thing. It's taken off. I don't know if I like that. I don't like all of these sold positions here. Let's get rid of it. It didn't come back. It's starting to rally. It shouldn't have rallied right there. I don't like it. Liquidate. Get rid of them. That's too much risk to hang on to that. I think that we got a chance it could go. That's the problem. I don't want to take that risk. It could drop back down. It hasn't come all the way back down to 38.2 yet. So it broke the blue lights. I wanted it to come down here, but instead it's taken off right now. And that's probably because we had a 3-day weekend and traders like to buy after a 3-day weekend. We talked about that last week, remember? And look right here, green. Oh, look at all that. All right, guys. We went through our current active, but we just don't have enough time to do everything we need to do. So if we come back over here, let's save this, save these charts, and we're going to come in here and I'll go back to our 100% club. Let's just run down through them real fast. All right. I won't spend a lot of time on them. So there's AppLovin. We did AppLovin already. Oh, no, we didn't. Or did we? I don't know. Oh, A2.5. It broke the blue lights. That's where we're at on that one. Broadcom. Holy smokes. Look at that thing. It's got to break the blue lights. Axion. Oh, man, all these charts are just like on fire. These are all the stocks that were made 100% gains last year. So that's what this is. It's the 100% club. 3-drive pattern. Look at that thing. It's trying to go into an A4 right now. Oh my gosh. Look at that thing. That's a lower high and a higher low. That's an A4 right there. That's a legitimate A4. Holy smokes. Wow. All right. So coin. Same thing. Look at that. Did we decide that's A1? I don't know. I like this A1. I think this is eighth. We haven't got A3 yet though. I don't know. I don't like the blue lights right there on this. I don't like to call that A2. That's ugly. I don't know. We sat and fought over this last week for half an hour. I think it's like that. That's how I'm going to call this one. I almost want to call that one little mountain right there. Two little mountains. One little mountain, two little mountains, three little mountains, four. Okay, there we already talked about oh no, we didn't. Carvana. Look, we got all of our A1s, A2.1, A2.75. Look, I really got crazy in here. We still had another little pullback. I call it A2.75 before I went to an A3. Isn't that funny? That's funny. That's funny to me. I find it funny. You got to find humor in the work you do, right? So this is my work, and so I call it an A2.75. To me, that's funny. GEV. All right. GEV. GE Vernova. Look at that. Oh man, these markets are on fire. I never seen anything like this. I think the last time I seen markets like this was last time Trump was in presidency, and they called it the Trump train. Holy cow, look at these babies go. Oh my gosh, it makes you feel bad you're not in all these. Oh, look at this thing. Holy cow. Oh my gosh. Got to break the blue lights. It's got to do it. Oh my gosh, look at this thing. Holy smokes. Holy gosh. I'm buying it, Lan. I'm buying it. Don't do it. Don't do it. Don't chase it. Look at this thing. Holy cow. Oh my gosh. Oh my gosh. Look at this thing go. Look at this thing go. Woo. MSTR. There we go. Now you can start to buy into MSTR. All right. We're about ready to hit that 38.2, 50, 61.8. And remember, these guys are heavy into Bitcoin. So this is Bitcoin. They're not really Bitcoin. They're a computer company, but they put a lot of Bitcoin. You can buy MSTY as a dividend off the YieldMax funds, and you get huge dividends off these guys, which I do. I made a lot of money off these guys in my dividend portfolio. So this is a nice one to have. Not the MSTR, not so interested in owning the underlying, but I love the MSTY. All right. I actually have a love-hate relationship with it because it makes so much money and then it loses a lot of money too because it's very volatile. So you have to be very careful. This is a really high risk one, high volatility one, I guess I should say. But I've made a lot of money in this market. And it's good to see it pulling back because now we can buy some more MST. Let's look at it real quick. MSTY. Can we buy some? How come that didn't work? MSTY. Ooh, baby. Yeah, baby. We're going to buy some MSTY. Add to our portfolio. I think I bought a little bit last week, like a small bit. Now we're going to, yeah, I think I bought some when it hit 38.2 right there. Might have been there. No, I think it was here. That was last week. So it's coming down again. We'll be able to buy a little bit more now. Oh, yeah, baby. Oh, this is good. We'll get it to come back down into here and then look for it to take off and go like a rocket ship again. Cross fingers. I don't know. It's stupid Bitcoin. I don't know anything about. I'm not good at currencies. You guys don't ask me for advice on currencies. I don't know anything about currencies. All I know, they do the same thing. They go through wave patterns too, but they're not very clean. They're not very clear. I don't like them. I don't like trading currencies. Just don't ask me about currencies. I'm not a currency guy. All right, that broke the blue lights there. It came down, hit 38.2. Natara is making beautiful setup. There you go. That's a buy if I ever saw it. Right there, boy. Get her in there. Well, we haven't broke the blue lights. You're getting in early. Remember, this is the spider web. This is your decision point. So the spider web comes in here like this, right? We have the spider web. And then we go from the peak, natural trend line. That first one seems like it's right there. We're going to put it right here. Natural trend line break. We got the blue light, which will come in here. Mathematical model will come in here somewhere where it will intercept, and then we'll have the horizontal. I call that's actually called the speed fan, if you want to know the official word for it. But Land's word for it is the spider web, because it looks like a little spider web between each drive. And we get two of those because you get the A drive and then the B drive and the C drive. And that means there's two spider webs in between each Elliott wave, all right? In between each, because there's two breaks, right? Between A and C. All right, so that's your spider web. What are you talking about, the spider web land? Well, it's in the book. In the book. It's in the spider web book. It's in the book. It talks about spider webs. All right, so go get the book and then you'll know. All right. All right, so there we're going into that's your first opportunity right there. All right, so there you go. You can wait for it to break the blue lights, but that's your first break right there. First candle break a new high. You can get in right here. Let's do it then, land. Let's not just talk about it. All right, it's not the prettiest pattern. Well, it is. Drive one, drive two. Look at that. That's really pretty. Drive one, drive two, drive three. Just like a train on rails. Let's see. All right. Well, how much do we want to put into this one? Let's come in here. We don't want $15,000. Let's put $5,000. 5,000. That's 32 shares. We don't want to put it all in right now. Well, I don't know. That's a good place to put it in. It broke 38.2 first, and it looks like it's headed. We'll put in. Let's put in 20 shares. And then if it pulls back, we still got some powder dry that we can put in a little bit more at 38 point back in here at 50. If it comes back, try to test back down in here, we can, and then turns down in here, we can go again. We can add a little bit more. All right. So you haven't got to stop, land. Well, that's because I'm going to add in down here. We'll put a limit. All right. We'll come in here. We'll go like this. We'll go with, we'll go a 3. Let's come down here to 15 and we'll put a limit in right there. Say if it comes down, test the 50% level, we'll put in 15 more. Oh, we'll watch it. We don't have to put the second limit in yet. All right. And then we got an NVIDIA we already talked about. Holy cow, look at that NVIDIA. Wow. We got Palantir, which we all love. I got made a lot of money in Palantir. I wish I could make more. You know, I didn't take advantage of Palantir as well as I wish I would have. Look at this though. We got A1 here, A2. These are your little mountains. Got to talk a little bit about Palantir because it's one of our favorites right now. A2. There's a little mountain. There's a little mountain. Everybody gets a little mountain right there. 3 mountains. See that? 3 drive pattern. I told you it would break those blue lights, and it did right there. Everybody was like, it'll never break the blue lights, land. Palantir won't break the blue lights because it's too good of a market. You know why it broke those blue lights? Because it's a damn good market. That's why it broke those blue lights. Now, the problem is it broke the blue lights. The spider web is like this: natural trend line, mathematical trend line, horizontal trend line. You got 3 opportunities to get into this thing. Right now, you could take some. You could take some if it breaks some blue lights. You could take some if it breaks the previous high. Those are all spider web locations for you to get in at. All right. We wanted this market to come back to 38.2. I said we would be lucky if this market comes back to 38.2. If it came back to 38.2, we would sell our children. All right. It's time to sell the kids, sell the house, sell the farm, sell everything, because you can just buy them all back once it comes back up. That's why. It's not like you sell them and never get them back. You sell them so that you can get them back. You can buy them new kids. Some that aren't mouthy. All right. So that's what we're looking for, but I don't think we're going to get it. I don't think we're going to get it. I think it's broke those blue lights. It's happy, and who knows? We may get that one little fake out. Remember, we talked about that earlier. Get that little fake out where you get that one bar that comes up, gets everybody to step in right there. Get that thing, and then it comes back down and breaks below just to take your stops out. So if you get in right there, remember it might do one of these little jig jogs. All right, comes here, down here, and then go like a mad dog. All right. So it might do that. Be careful, because if you say, well, I'm getting in right now, you can do that. You can put some in. Let's do it. All right. Let's come in here. We're going to say, all right, we're going to put a few shares in here. We're not going to get crazy because we don't know if it's going to take off right here and go to the moon. We'll put in, well, that's only, let's see. We're going to put in, let's put in $2,500. That's good. Right there. So we'll put in 20 shares right now. I don't want to do that because I think it's going to come down farther. You know why I think it's going to come down farther? Because I think BlackRock wants it. I think BlackRock wants to get into this thing. I think BlackRock doesn't feel like they've got a big enough handle on the thing is. Nobody wants to miss out on this big run. I'm not going to put anything in right now. I think it's going to come down farther. I think they want it. I think there's too many big companies that want to get a bunch of this. And they don't want to buy high. They're going to let it flush. I think it's going to flush. I may be wrong, but I may be right. I'm going to wait. I want to buy it lower. I want to buy it down here. I don't want to buy way up there. I know it broke the blue lights. I know it's on its way back up. I know that's a spider web buy signal right there. I know it is. I know you should buy right there. But I think we're going to get another pull down in here. And I want to see it down here. I don't know if we can make it all the way to 38.2. That might be asking a lot for this market. But I'm going to wait. Just not going to do anything right now. I already have a lot of it. I don't need to add to it. Well, not in this portfolio, in my real portfolio. PLTY. Look at PLTY. We did a video on this one. If you didn't see the video on my YouTube channel on this one, go watch that video. It was a good video. It's just a video. It's not a live session. It was just a video out there that I stuck out there. So I did a little video on this. Go watch it. All right. And then Rocket Lab. Oh, my goodness. Look at this. Rocket Lab. Holy cow. This thing's on fire. That's a B2 right there, guys. That's a B2. B2. All right. There's B2 right there. What do you want to do with the Rocket Lab B2? We'll buy some B2. We're not afraid of B2. We should have been buying down here on the break of the blue light, but we'll buy some B2. We're not afraid of B2. It's only $25 a share. Let's put $1,000 in there. Rocket Lab. And we'll just do 35 shares. All right. That's buying high on that bar, but that's a break bar. It would be okay. If it goes high, if it comes back down, pulls back down in this region here, gives us an opportunity, we'll buy some more back down in here. In fact, we could do another limit order down in here. We say we'll buy some more back in here. If it comes down and breaks that, we'll buy another chunk of money. All right. So SMCI. Oh, I think we already played that one. We like it too. We like that one. All right. AT&T. I don't know about AT&T. Look at that. It's going through a funny little phase there, isn't it? Huh. It's going into a wedge pattern. What are you going to do with AT&T? Nothing. Toast. Oh, look at that. All the way up, all the way up. Come on, Toast. You can give us a little opportunity to come back in right down in here. We want to see at 38.2. Please come down to 38.2. Targa. Oh, what the heck is going on with Targa Resources? This made 100% last year, and it's struggling this year? Huh. That's weird. That's really weird. Look at that. Are we coming into a decision point? It's definitely following along those blue lights. Look at the blue lights coming up underneath it. Nice little trend line support. That looks like it wants to break down again to me. Looks like it wants to fluff one more time. Tesla. Tesla breaking its A3. Way to go, Elon. Nicely done. All right, that's our A3 on Tesla. Tesla. Ooh, look at this on Tesla. If you wanted to get in, if you wanted to put a little bit of money, the thing is on the Tesla is right up here at A3. How high that A3 is going to go? Let's do a Fibonacci projection and see. If we go from here to here, back down to here, we'll probably see at least breaking above that high, maybe up in this region here. That's where it's saying. We got the possibility of seeing that thing up there. But the Tesla looks really nice for a buy right there. If you want to get in, You always have to weigh it against the underlying, because the underlying, if it goes up here, we're going to expect we'll stretch that out, right? We'll bring this up. Let's say it comes up to 90. Let's put it at 90%. If it comes up there, we would expect it to come back down to 38.2 and maybe even, 50. I don't know. It's Tesla. You never know what it's going to do. It's really volatile. Could come all the way back down to 61.8. The reason I'm really kind of worried about this one is because I want to put some more Tesla in. I want to buy here, and that's a nice buy signal right here. We broke our first blue lights, right? We got the drive 1, drive 2, drive 3. We went sideways. We broke. We rallied. We're in the nice place to be buying into Tesla. But if Tesla does turn and fluff all the way back down to here, you'd have to sit through a little drawdown on your Tesla too, because Tesla will fall back down too. Not as much. I mean, it's not nearly as much, but then we expect to make the drive to go into the B drive, right? Where that's going to happen, we don't know. B1. But the point I'm trying to make is that if you wanted to put some money into TSLY, I wouldn't complain that you did it right there. I put a whole bunch of money into TSLY all the way across here. I've been just loading up. I got bear in here, loading up for bear. So that's not a bad spot to be putting in some more Tesla. I don't think you'd be sad if you bought some Tesla right there. I think you'd be okay. I think you'd be happy that you did. All right. Get some Tesla. All right. This is going to pay you some big dividends. All right. United Airlines. Look at this A3 coming in there. Oh, it's not an A3. What happened here? We were anticipating A3 in here. Is that right? A1. Yeah. A1, A2. It was an A3 fail. Our A3 failed. So it came back down to 38.2, like a train on rails, right there. Broke the blue lights. We're going into a B drive. That's a B1 right there. Now, it's the first. It's the first, right? So you got your spider web. The next one will be breaking the blue lights, and then you'll have your horizontal line. So if you want to take your early entry, that's it right there. That's your B1. It hasn't broke the blue lights yet. So it could do that little fluffity duffity do where it comes in here, up, makes it one more down in here, goes to 50, and then takes off and goes from there. So be mindful, but we could put a little bit in here. We don't want to put our whole wad in there. It's $2,000. Let's put, remember, this thing made 100% gain last year and it pulled back. We might be on fire. We put another $2,500. This should do for 30 shares. We'll put that in right there. And then be ready to put another 30 shares in down here. If it comes back down, maybe we'll put if it breaks that 38.2, we'll put it in right there. If it breaks 38.2, it'll probably go down to 50. So we'll put it down there, just above 50%. Just in case it does this little flufferty do ABC pattern on the way down. All right. If it doesn't, it goes from here. At least we'll have a little bit in. We won't feel bad that we missed it completely. All right. That's how we do it. And then Veritav. Oh, wow. That's our A1. That's got to be A2 because it broke the bottom. That's an A2.5. That's an A3. A1. Man, I thought you weren't going to spend so much time on this. Well, you guys can leave if you got to go cook your eggs. I got to do this stuff anyway for myself. It's not an X. It's an A2. A2. So that's A2. This is an A2.5. And that, oh my gosh, it's an A3. I don't want to be a buyer at A3, so we're going to draw our Fibonacci ruler in there. Ooh, what's it doing? What's it doing? Give me some room here. Turn off my auto scale. All right, yeah, that's A3. This is an A2.5 because it didn't break lows. Broke lows there, broke lows there. A3. Got the blue light coming in there. Wow. Vertiv Holdings. They broke 100% last year. This is going to be a good stock. I want to see it break. See it break. Break those blue lights. Come back down to 38.2. We don't know where it's going to break those blue lights. Up in here somewhere, maybe. 38.2. Boom. Who knows? All right, guys, we got one left. One last one. And it's the same thing. Look, oh my goodness, look at this. I'm going to call this this is our break. That's our A1. I'm not going to call this a new A2 right there. That's a A1.5. Let's call that A1.5. A1.5. Because it broke the highs, but not the lows. So it's just a little tuffety-duffety-do. I don't have names for these things. Make them up. Tuffety-duffety-do. This broke lows. So that's your B1. No, I mean A2. That's your A2. Right there. And that's A3 right there. A3. So that's A3. That's broke the highs and the lows. It is what it is. Man alive, look at that thing go. So we're going to draw this trend line right up underneath there. All right, that's it, guys. We're at an A3 on VST, Vistra. The 100%, that's your 100% club. All those companies in there broke 100% last year. We got a couple of them. We made it. We caught a couple of them down low. We got the NVIDIA. We got the SMCI. We're just looking for a better opportunity to get into some of these. They all just shot off like rocket ships. Hey, did we nail that one? We didn't. We went too fast. That one. That's a B1 right there. It's coming into a B1. Not yet. Hasn't broke the blue lights, but it's looking like it wants to be a B1. Well, it'll have to be a B1 eventually. This is whether it's going to be right there or not. Well, I don't know. Got to break blue lights. App loving. We're loving app loving. I need to see it come back a little farther. I really want to see these things come back into these 38.2s. I want to see it do this little dance. If it's going to pop here, it's got to come back down here. Come on, baby. Come on. All right, guys, that's all I got for you today. If you haven't subscribed to Pitt News Magazine, go do that. That's where you're going to get your spreadsheets once I get them all done for you. And I haven't got anything else for you today. I'm going to leave you with that. We've gone too long. I'm not going to give you a Sunday school lesson. I've kept you too long. And hopefully you had fun today and you learned a little bit and you're making a little bit of money along the way. That's the name of the game, right? Let's see how well we can play this carnival game together. And we'll catch you tomorrow afternoon for Power Hour, where we're going to do a little day trading, because that's always fun to do too, because that's where we get money to put in here. All right, guys, that's all I got for you. Take care.
All right, that wraps it up for today. If you got something out of this, do me a favor. Like the video, subscribe to the channel, and share it with someone else who's trading or learning.
Hey, don't forget to tell them to subscribe to Pitt News Magazine.
Oh yeah, definitely subscribe to Pitt News Magazine. You'll thank us later.